And by and large, it was a positive day of trade, 19,800 being held on to, but range bound at best, given the tight range that we were confined to. You did have the broader markets, though, and that really seems to be the talking point, given the fact that the Nifty small cap index fell for the third straight session on the chart. So a little bit of profit booking being witnessed there. But nonetheless, for our frontline index, it was the highest close since the 20th of September. A little bit of selling being witnessed within the banks. And from the October lows, there has been a tremendous up move, in particular double-digit gains of nearly 11 and 13% for the mid and the small cap indices, respectively. But Nikunj, that profit booking in the small cap index and the broader markets, no cause for concern, right?
So I was looking at the real punchline to describe the market, and the way I would describe the market is that the direction is up, momentum is missing. Yeah. Now, why the direction is up? Look at the Nifty, whether it's yesterday's intraday close or the fact that Nifty is closed at its highest level from September, end of September, that tells you where the direction is. But even though the direction is strong, the markets are not making rah-rah moves. It's like a market where you are taking one step forward and then you are pausing. Then you're taking one step forward and then you are pausing. So I think that is the construct of the market in which markets are moving. You know, Anisha and we were discussing yesterday, and you know, Aman, soon you'll be discussing these stories with your daughter, the rabbit and the hare story, right? What is the rabbit and the tortoise story? The tortoise gradually moves, but it moves up. That is large cap for you. Yeah. The rabbit goes faster.
Breakneck speed.
But at breakneck speed, but eventually they will just hit a pause button or they become sleepy. That's small cap for you. Right now, it is a tortoise versus a hare story. The small caps are the rabbit, the large caps are the tortoise, which means directionally you know that tortoise is moving higher, but it's taking time before it reaches a new high. And small cap, you know the speed at which they are growing. So I think the direction is strong, but the momentum is missing.
Time to write a children's book. There you go.
Children's book, and teaching them already about SIPs and the markets, because you start early and you compound well.
You know, someone asked me actually, and we were discussing this a couple of days ago, and they asked me that, okay, you know, you've been a market commentator for 20 years, and what's one thing which you think you would like to change? And I was very open in admitting it, which is that, look, you know, I understood the power of compounding very early, that what it means, right? Whether it is market or whether it is habits. But unfortunately, by the time I started implementing it, I learnt about it in 20s, but I started implementing in my 30s. So my appeal to anybody who's watching the show is that, you know, I've lost 10 years of implementation of power of compounding. Please don't do that. Power of compounding is the most beautiful thing, whether it is money, whether it is habits, whether it is bad habits also, you should avoid power of compounding in the reverse, but that's the way it is. So remember, it's a rabbit, and it's a rabbit in a tortoise story. Large cap, tortoise, mid cap and small cap, rabbit.
Okay, so that's the best way to put it, and of course our appeal would be start early and make the most of that power of compounding as well. But what's happening across the globe is also important to put in context. Of course, today the US markets will be shut on account of Thanksgiving, but ahead of that they managed to end comfortably in the green. Actually, the US 10-year yields had actually dipped to almost a 2-month low, and on account of that we saw a bit of a risk on rally as far as the equity markets is concerned. Quite a bit of volatility when it comes to crude prices as well. Intraday we saw over a 4% dip in crude prices. It had gone below the level of $78 per barrel, and that happened because OPEC decided to delay their meeting. Earlier it was slated for November 26, and now it's towards the end of the month. So that put a bit of a spanner to works as far as crude prices is concerned. Having said that, this morning they're pretty much recovered. Crude prices are again close to that $80 per barrel mark. But Nikunj, you know, the global markets have been doing their own thing. Of course, S&P is sitting at, you know, multi-month high. Nasdaq is sitting at 22-month high level. What kind of correlation should we draw from India? Because even when the rest of the markets are falling very sharply, India wasn't falling that much.
Anisha, look, the construct of the market, at least in the month of October and November, I think is global in nature. I mean, has India done very well in isolation? The answer to that is actually no. You know, we may feel very happy and say, okay, the best game in the town for global investor, but we are not the best performing market of this year. Keep China aside and you compare India with, let's say, other markets, we are right in the center. Not the best, not the worst, we are right in the center. So the construct of the market, I guess, at least in last couple of weeks in my book, has been global. Post what happened on the geopolitical front, there was a bit of a stutter and there was a bit of a stumble in, let's say, October. Post that, I think global markets have made a comeback. Crude is down, dollar index is measurable, VIX is under control, silver is not shot up, gold is not shot up, I beg your pardon. So I think a large part of the market action is largely centered around global markets. And globally, as of now, I don't think markets are really worried about something, which is that, Fed, you've heard from Fed, you pretty much know which way the macro data is moving. Yes, there is a big move which currently is happening in the AI world, but that is something what everybody in a sense is not really worried about. So the way I look at things is that for a rally which let's say started in end of October or early November, is there a line of sight for a bigger gain or a last hurrah or extension of this rally till Christmas or till year end? The answer to that may well be yes. Why? Because you don't see too many pitfalls and you don't have too many calendar events, and typically the seasonality factor will always kick in. So I will not be surprised that the rally which started, let's say, in month of November may just have few legs. So depending on what you're asking, whether you choose a rabbit or a tortoise, I guess directionally both of them are going to go higher.
Okay, there you have it. That's the tale of the tortoise and the hare, and being explained in a market analogy standpoint. That's the Nifty implied open, by the way, on the gift Nifty at 19,895. But let's get a move on and also tell you about all the action within the primary markets, because that's hot this week for sure. Tata Technologies, Fed Bank Financial, IREDA and Flair Writing Industries. All four of them, all seeing their IPOs open, and of course the overall responses that we've witnessed on various days. And just looking at what we have seen for Fed Bank, till 5 p.m. on day one, it was subscribed about 38 times. For IREDA, about 4.5 times. Flair Writing, a total subscription of about 2.1 times. That's on day one. But of course, a big talking point and the cynosure of all eyes, Tata Technologies. And within minutes, you saw those, pretty strong numbers coming in. And total subscription at about 6.5 times on day one, Nikunj. No surprises there.
No, actually the numbers will be magnified by the time the issue opens. I mean, we will get some 30-40 times kind of a number, because please remember, first, the IPO cycle is no longer a 21-day cycle, it's a 3-day cycle. Before you realize the IPO is opened, email hits a mail that, okay, this is a press release and that's when the listing is happening. It only takes 3 days. Beats a Tata group of company. We've discussed enough that, okay, why are they going public and what is the business. But I guess what is important here is that issues like Tata Tech or D-Mart, they go public. Some of these companies are built to last companies. And when they go public, you will not get them cheap. Because what we are saying, nothing new, market has discovered that already. So what is the best approach? Well, the best approach is that if you've not got them in the IPO market, and if you have a genuine 3 to 5 year time frame, and you said, look, I'm happy to digest a 15-20% volatility, maybe a year of no return, then even if Tata Tech IPO opens, let's say at a reasonable pop-up, which is 25 to 30%, 30 to 35%, it may make sense for you to buy it actually. Now, when it comes to ICRED, it's a completely different, kettle of fish. It's in a business which is going to be growing, but it's an issue which is not very cheap. But again, there is a credit cycle risk associated with it. So I'm not so sure whether you want to buy it after the IPO pop. But Tata Tech, I mean, the example I give is that look at, some of the fantastic IPOs like D-Mart. When they went public, even though they were expensive, they kept on creating wealth. And considering what the average P multiple of the Tata group of companies is, even if it aligns with the sector P in that space, I think it still has a long, long way to go.